Welcome to the video. Today we will unpack the controversial truth about Zelle and other peer-to-peer payment apps, and how your own usage can be the hidden trigger for account freezes and bans. We will explain what P2P services are truly designed for, how terms of service apply, why banks separate personal and business funds, and how misuse escalates into shutdowns. We will also walk through practical steps to protect yourself and your money. Here is our roadmap. First, we outline the hidden risk in P2P apps. Next, we clarify the intended use of these services. Then, we cover bank terms of service. After that, we show how freezes and bans typically happen and the red flags banks monitor. Subsequently, we provide an action plan to switch to a proper business account, followed by a brief case study and a practical checklist. Finally, we test your knowledge with quick quizzes, wrap up key takeaways, and close with a disclaimer. Let's begin with the central risk. Surprisingly, the biggest threat to your P2P account is not always external fraudsters. Often, it is misuse of a personal account for business. This includes receiving regular payments for goods or services through personal P2P channels. As we transition, keep in mind that this can violate terms of service and expose you to account freezes or permanent bans. Peer-to-peer services are designed strictly for personal payments, splitting dinner, paying rent, or reimbursing a friend. Conversely, they are not intended for commerce, such as regular sales, invoicing clients, or marketplace payments. Consequently, you must keep personal and business funds separate. If you ignore this separation, you may have limited recourse when disputes arise, and you might be locked out of the P2P ecosystem altogether. Now let us examine the terms of service that govern this. This flowchart shows the escalation path. First, a personal account begins receiving regular payments for goods or services. Next, automated systems detect high-volume patterns or commercial keywords. Then, a risk flag triggers a compliance review where terms of service are checked. If the reviewer determines the activity is commercial, a temporary freeze and information request is issued. Afterward, the institution decides whether to terminate the relationship or reinstate the account with a warning and heightened monitoring. If the activity was not commercial, the account typically returns to normal with continued monitoring. This progression explains why seemingly sudden freezes often follow identifiable patterns. Terms of service draw a bright line between personal and business use. Banks require strict separation and typically prohibit receiving payments for goods or services via personal P2P. If you cross that line, liability for disputes and chargebacks may fall on you personally. Additionally, banks often reserve the right to terminate the relationship without prior notice. Protection can be driven by transaction velocity, payment descriptions, known commercial keywords, and patterns among your counterparties. Next, we will compare personal and business banking to clarify the differences. On the left, personal P2P is suited for occasional, low-risk reimbursements and explicitly excludes commerce. It offers minimal reporting and limited dispute options, optimized for personal convenience. On the right, a proper business account is built for selling goods or services. It includes merchant tools, invoicing, chargeback workflows, accounting integrations, and scalable limits alongside compliance support. Consequently, using the correct account type aligns your activity with the bank's policies and reduces shutdown risk. Now let us make this practical with a do and don't checklist. This table provides a quick checklist. Do use a business checking account and merchant tools for sales payments. Do send invoices or check out links through proper business systems. Do export statements and reconcile regularly. Do follow formal merchant dispute workflows. Do scale by working with your bank on limits. Conversely, do not use personal P2P for commercial payments. Do not direct customers to a personal handle. Do not mix funds. Do not rely on informal chats for disputes. Do not push high volumes through personal apps. Next, we will walk step by step through the transition process. Follow this action plan. First, select a financial institution that offers strong business checking options. Next, gather required documents such as your EIN or SSN, formation documents, identification, and any operating agreement. Then, open the business account and enable merchant services. Afterward, update invoices, payment links, and checkout flows to run on business rails. Subsequently, notify customers and cease using personal P2Ps for sales, migrating recurring payers to the new methods. Continue by reconciling monthly and maintaining clean records. Additionally, set alerts and manage disputes within your merchant portal. Finally, remove personal payment handles from all storefronts and communications. Now let us visualize a typical incident timeline. This timeline outlines a common sequence. On day 0, unusual activity is detected. Within 1 to 2 days, an automated risk flag prompts an initial review. Between days 3 and 7, a temporary freeze may occur, and the bank requests information. From days 7 to 14, compliance conducts a deeper review. Between days 14 and 21, the institution decides to reinstate the account with a warning or to close it. Finally, during days 21 to 30, a customer may appeal or transition to a business account. With that context, let us examine a brief case study. Consider Alex, who sells sneakers and accepts weekly payments via a personal P2P handle. As volume grows to around $6,000 per month and payment descriptions reference orders and sizes, automated systems flag the activity as commercial. A fraud complaint elsewhere triggers a broader review, leading to a temporary freeze, an information request, and ultimately account closure with a P2P ban. To resolve the issue, Alex opens a business checking account, enables merchant services, and updates all payment channels. The result is stabilized processing, proper records, and standardized dispute workflows. Now let us test your knowledge with a quick quiz. Quiz time. The question is, which behavior most likely triggers a shutdown of a personal P2P account? Option A. Using personal P2P to receive regular payments for goods or services. Option B. Paying your roommate back for utilities. Option C. Splitting a restaurant bill with friends. Option D. Sending a one-time reimbursement to a family member. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is A. Using a personal P2P account to receive regular payments for goods or services is viewed as a commercial activity and violates terms of service, which can trigger reviews, temporary freezes, and account closures. In contrast, the other options are typical personal reimbursements. Here's another question. What is the best immediate step if you are regularly getting paid for services? Option A. Keep using your personal P2P and hope for the best. Option B. Switch to a dedicated business checking account with merchant tools. Option C. Open a second personal P2P account for business. Option D. Disable P2P entirely and go cash only. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. Switching to a dedicated business checking account with merchant tools aligns your activity with bank policy, reduces liability, and grants access to appropriate dispute handling and reporting. Opening another personal account does not solve the policy violation, and going cash only is usually impractical. Here is a concise checklist in Markdown format. First, separate personal and business funds. Next, use business invoicing or checkout for sales. Then, reconcile monthly and keep documentation. Additionally, reduce risk by avoiding commercial keywords on personal transactions, monitoring volume and counterparties, and setting alerts for disputes and chargebacks. Now, let us reinforce the main takeaways. These are the main points. P2P services are for personal transfers, not commerce. Banks enforce strict separation between personal and business funds. Misuse can lead to freezes, bans, and limited recourse. If you are selling goods or services, move to a business account immediately. Finally, document transactions, reconcile regularly, and use proper merchant tools for stability and compliance. Next, we will summarize and then provide an important disclaimer. To summarize, using personal P2P accounts for commercial activity violates common terms of service and creates meaningful risk. Freezes and bans typically follow identifiable patterns such as transaction volume, keyword usage, and counterparty data. The practical fix is to operate through a business checking account with merchant tools. Finally, maintain clear records, perform regular reconciliations, and follow established dispute workflows to stay compliant. Now let us add a brief but essential disclaimer. Disclaimer: this content is for educational purposes only and does not constitute legal, financial, or tax advice. Policies vary by institution and jurisdiction. You should read your bank's terms of service and consult your financial institution or a qualified professional for guidance specific to your circumstances. And to conclude, here is our final message. Thank you for watching. If this video helped you avoid a freeze or ban, please like the video, share it with someone who needs to see it, and subscribe for more practical finance content. Finally, share your experiences and questions in the comments so we can all learn from each other.